Hello, I'm Ryan Ziegler and I'm here to talk about the action on LME copper stocks and LME price and spreads over the last few months. The LME copper market is the key global copper market, but it has a lot of influence on COMEX copper, and there's been a lot of heavy activity last year and this year between COMEX copper stocks and copper spreads and LME copper stocks and spreads and prices. Since January this year, since late January, there's been a sharp run down on available LME copper stocks. They've declined down to 20,000 tonnes from around 100,000 to 150,000 tonnes, which is a low level for normal available LME copper stocks. If we look at the first chart, we can see that the reduction in LME copper stocks or available copper stocks has been down to stocks getting cancelled. Now, there could be two reasons for, well, at least two reasons for this, but the two most likely reasons are it could be consumer buying, or it could be merchants trading physical copper stocks, and then they would have the option, if there's a backwardation, to deliver the stocks back to market and lend those spreads. So it could be a trading angle or physical consumption angle. Looking at physical consumption, the LME is not the usual place you'd go shopping for physical copper, because the LME's got a global network of warehouse locations, and if you buy physical copper on the LME, you get a random allocation anywhere in the world. You'd have to pay another premium to be able to pick this copper up, and then hefty trucking charges. So it's quite unusual for consumers to source metal directly from the LME. If we go back to the merchant trading angle and look at the second chart, there you can see that when the available copper stock declines, you can see a sharp rise in the premium of cash copper, which is spot copper for prompt delivery, against the 3-month copper, which is the most popular traded contracts on the LME. And if you look at the chart, the red line shows the cash to 3 spread, and it's moved from $30 contango in early January before the cancellations, and it's moved down to about $70 backwardation, which is a premium of cash over 3-month copper, and that is largely due to the reduction in available stock. This has been reflected in TOMNEX copper as well. TOMNEX copper is the price you pay to borrow or lend a position of copper for 1 day from tomorrow to the next day, and that's traded as high as $20, $25 backwardation in February, and was trading between $3 and $8 back this morning after being valued at $10 back last night. If you look at the copper traders who cancelled this copper, there was a sharp delivery of copper stocks into the US, LME warehouses in the US, in Chicago and New Orleans. Last week there was about a 75,000 tonne rise in copper stocks in Chicago, the US and New Orleans, and that was the spike up in the green line on the chart. And then on Monday, yesterday, there was a 25,000 tonne re-warranting, which is the original cancelled tonnes back in January, February. 25,000 tonnes of those was returned to the market, and you can see that the stocks are back to, available free stocks are back to more normal levels. What this means to the spreads is that should have eased the spreads, but if you look at the third chart, there's another factor in play here. Back in December last year, there was heavy selling of LME 3-month copper. In December, the price broke down below $6,000 a tonne. And on 3 months copper selling, that means that short positions will be due in March, i.e. this week. And if you look at cash to 3s, last night it backed up again to 33 back. So in summary, we're going to see more volatility in nearby spreads and prices, but I think the stocks are back to, in terms of free LME stock, they're back to more normal levels on the LME now. Thank you.